Welcome back, traders and investors, to Benzinga's pre-market prep. I'm Brianna Valesky here with Joel Elconin. We've got Bill McBride on the line. He is the author of Calculated Risk. A full-time blogger, Bill McBride retired as a senior executive from a small public company in the early 90s. Bill, how are you doing this morning?
Great. Thanks for having me on, Brianna.
Absolutely. Thanks for joining us. So, you started Calculated Risk when the blogosphere for economics was barely being invented, and I mean, you were on the forefront of the housing bubble, bad bank lending practices. How did you get that started, and how did you start following all of those?
Well, it's funny because I heard about blogging and I wanted to figure out what it was, so I figured the best way was to start a blog. And the number one thing I was concerned about, I started it in January 2005. Number one thing I was concerned about was housing. So naturally, my blog became a housing blog. At least that's the way it started. I think every post in 2005 was about housing and how it was going to hurt the economy.
Okay, so let's get a little bit on what you've been posting recently on Calculated Risk. I saw you posting about Toll Brothers. They did have earnings this week, but I want to hear specifically what you were focusing on with Toll Brothers.
Well, both Toll Brothers and other builders are reporting better sales, and it looks like we might get a pickup in new home sales this year. And that's really my main focus on that. Is if you look at the reports from Toll and several others, they are mentioning they're getting more traffic, more sales in this quarter. And usually this quarter ends in February or March. So it's a nice positive to start the year.
We also saw good sales coming out of Home Depot. Do you think that's another effect of what might be increased home values?
I think Home Depot is probably related more to home improvement. And one of the things that is interesting we're seeing is we're just not seeing much inventory for the existing home sales market. And what that probably means is people are improving their homes. And so, instead of being able to move, they're upgrading their houses. And I think that's a real positive for Home Depot.
Bill, when did you say you started your blog?
January 2005.
Okay, so ahead of the housing crisis, and you said it, you kind of, picked up on that. Is there anything you're seeing out there? Obviously, when you have big declines in the market or bear markets, there's usually a driver, and it's usually not the same thing. You had the tech bubble in 2000, you had the housing crisis in 2008, 2009. Anything out there on the economic landscape that makes you think that may create a bubble in the market?
Well, Joel, I've actually written extensively about the best leading indicator for the market, and that is housing. You mentioned the 2000 recession, which housing wasn't a leader for, but that was business investment and the stock market took the economy down. So what I usually watch is housing, and when I talk about housing, I'm talking about housing starts and new home sales. So if you wanted to look for an indicator of problems ahead, I would always look to housing first. Not that you should not look at other things, but right now, I'm actually pretty positive, about as positive as I can get.
You didn't seem real positive about being positive. Come on, say that was some conviction there.
Well, let me tell you this, Joel. 2 years ago, I wrote a post called "The Future is Bright."
Okay.
And if that, and the idea was that we're heading into a nice period here of economic growth, and we've had 2 years since then, and I don't see a recession in the next 2 years, so I think we're still in this period. Plus, we're now entering a period where this new young generation coming out of college is just entering the workforce in mass, and this is going to be a huge driver for the economy. So I'm especially positive for the next decade.
Okay, let's take it. Let's take it one decade at a time. In looking at housing, a big component of that is getting a mortgage and interest rates. Do you see? Let's just switch gears to the interest rates here. I mean, even a small bump up in interest rates here. I mean, that's not really going to put a crimp on the housing market, is it?
No. No, housing is interest rate sensitive, but I think there's a fairly wide range that it doesn't have a huge impact. Now, that said, last year when interest rates popped up a little bit, housing slowed pretty substantially. So, it really depends on how much rates rise and how quickly. I don't think we're going to see a huge increase in rates anytime soon. So I'm not that concerned about that.
Okay. And looking at the testimony of Janet Yellen, she started out yesterday, continuing today. Do you think that she's leading us in the right direction? Are you comfortable with her testimony over yesterday? And what are you looking forward today?
I think the most important thing that she said yesterday was that she hinted about as strong as she can that the word patient is going to be dropped in the March FOMC statement. So, and what that means is that not that they're going to raise rates in June, but they're going to have the flexibility to do that. So I think that was the most important thing she said for investors to pay attention to. As far as, Janet Yellen had an excellent Fed chairman. A lot of people don't understand her background. She was Fed governor back in the 90s. And she was actually one of the more hawkish people pushing Greenspan to raise rates because of the stock bubble. It was one of the reasons. And so, people who think that she's just a dove just don't understand her history.
Hey, Bill, this is Garrett. Sorry, man, my mic was stuck. Bill, I'm a fan of your blog. I've been reading it for a while. I wanted to get your views, perhaps, on what you think about the current environment globally. We've had a whole bunch of central banks that have taken action since January, and it looks like the U.S. is going to start seeing economic strength. I'm a little wary that the economic strength it's not on our own accord. It seems like the strength is going to come from a weakening of other governments, a weakening of other economies. Do you have a view on that? Anything that you care to share?
Well, I think that the Fed was kind of ahead of the curve compared to other, not compared to the U.S. economy, but compared to other central banks, because under Bernanke we were aggressive in cutting rates and then doing QE. I mean, you look at Europe, and they're just so far behind the curve, and of course, and then they've had the fiscal austerity. So, I mean, that's been a real problem. They've just slowed their economy dramatically. And that does have an impact over into the U.S. because that's made the dollar really strong since we're the best economy in the world right now, which is weird to say. But they have not been aggressive enough. And so hopefully they'll get their economies going again, and then that'll be good for us, too, as an exporter. Luckily, the U.S. isn't a huge import-export country. I mean, our main partners are Canada and Mexico, so it's not like we're Europe where we trade with everybody.
What's your view then also, if we were to raise rates in this country, what is this going to do for fiscal policy here? Because I've noticed that as we've cut rates, there's been an increase in the level of debt that we take on and the tightening of the maturity level that we're experiencing. Is there any opportunity that the Fed's actually going to be able to raise rates without choking out fiscal policy in the U.S.? Because it looks like we're kind of having trouble meeting our interest expense payments as it is now. What does this mean going forward if the Fed were to try to raise rates?
Well, if we were really having trouble meeting our interest payments, what people would pay what people would be willing to pay for treasuries would change, and then the interest rates would go up. So, I mean, right now, the Fed's not buying, and interest rates are still really low on all the treasuries. So, that's just public market. So I don't think that the Fed raising rates a little, I mean, they're not going to raise rates quickly. The Fed raising rates really is not going to have an impact on the fiscal situation. The fiscal situation, it's hard for a lot of people to remember, but in 2000 we actually had a surplus, and so I sit there and look at it and go, well, what had happened? Well, we cut taxes, and we had a recession and a war and all kinds of things. So we had no contingency planning, ran up a big deficit, and then we ran up a large cyclical deficit on top of it with the Great Recession. Now, we've pretty much unwound as much as we can the Great Recession, there's probably a little bit more that we can get from fiscal policy, tax increases on that. But mostly I think it's more going to be, is Congress and the president going to get together and figure out a way forward on fiscal policy?
Bill,
and the answer is no, not in the next 2 years.
Bill, you also like to write about the banking industry, and I see your blog here. Fewer problem banks, residential REO declines in Q4. I mean, a lot of the driver behind some of the profits in banks has been the availability of cheap money. Not necessarily that they're loaning it out at an alarming rate, but some good news yesterday out of J.P. Morgan. Just give us your outlook on the banking sector.
Well, the main reason I track banking is because especially a number of years ago, was because it looked like a lot of banks were going to go under, and when banks go under, that has a ripple effect because people that they lend to, they can't get those loans anymore, and so it has, and then of course I always track the real estate owned, the REOs, which are foreclosed homes that the banks are sitting on, because that gives us an indicator of how many more distress sales are going to come onto the market. I follow that from several sources: Fannie, Freddie, FHA. So that tells us really, how many more distress sales are going to hit the market, and distress sales are really holding down some parts of the country, like Florida, parts of Florida. Parts of Florida are booming, but parts of Florida, there's still really high levels of distress sales. So that's more of my focus on the banking, is how does it impact housing? Not directly as a lender, because they don't even make most of the loans anymore. But the more as how many more distress sales are going to hit the market. And so that to me was the key indicator in the FDIC report yesterday, was the number of REOs that the banks own is continuing to decline.
Okay, can you just, we've talked about, the banking and the housing, a little bit of interest rates. Could you just, looking farther out here, just, give us your perspective, just on the overall markets?
Well, are you talking the overall stock markets? Or?
Yeah, the overall stock market. Yeah. Yep.
Yeah. Well, anyone who reads my blog knows I try to avoid talking directly about that every day. But I'll say this, is that when the economy is okay, it's a good time to be in equities, and when the economy is recovering, it's a good time, or expanding like it is now, it's a good time to be in equities. When you don't, if you want to lighten up, you want to do it back when you're heading into a recession, and I don't see a recession in the future, or in the near future. I mean, there will be a recession, of course, but not in the next couple of years, I don't think.
Okay, we've been on the line with Bill McBride. He's the author of Calculated Risk, a full-time blogger, keeping a close eye on the housing market. Bill, thanks for joining us, and we hope to speak to you again soon.
Thanks so much, Bill.
Okay, thank you for having me.
All right, moving on here. S&P's, did someone turn off, my quotes or something?
Why?
Because it's it just says 211.50, 211.50, 211.50. We're not moving here.
I think that's flatness.
Can we have something? You got something for us? Any news or any earnings that we missed here when we were doing our last interview?
Let me see. TJX was kind of like the last big one. I think we did cover that one. Getting a little bit of action out of the Lowe's call. Not sure if the chart is reflecting that, but the company is giving a little indication into the next year. They said they are expecting growth in the home improvement market in 2015. They're expecting increased gross margin in 2015, expecting increased spending efficiency this year. Is there any reaction there in the stock?
Yeah, it's going down.
Oh, okay.
I guess that good news isn't enough good news here.
Improved housing market even?
Yeah. You did.
They don't care.
You did have some support when we were talking about the earnings at 76.35. That was minor intraday support. and you've taken that out. Now, what's kind of interesting is 75.82. That was the high from yesterday. Let's see if we come down and fill the gap and rally. If not, if we come back down into the below that high of 75.82, not a lot to get to until the all-time high close of 74.65. Ace is popping in here with a few stocks. See if I'll do a quick technical and see if you can find any news on them.
Okay.
BIOC here.
Yeah, see Biocept.
Biocept. I can't get a stock by you. Here we go. Trading up in the pre-market here. Let's see what the
19% move.
Is that a good tick there? Let's take a look. Yep, we are trading up over $4. Did get a spike to 4.20. Have pulled back off that level here. Now hanging out right at $4. I'll just alert our traders that you have a high in the fours, but it's at 4.15. So that's coinciding with the pre-market high. Keep an eye on that as a potential resistance point above the $4 here. You do have another monthly high at 4.60. So big pop and a little stock, decent volume. Let's see if he can hold the $4 level.
Just wanted to confirm, I'm not seeing any news in that. I'm kind of looking around that industry, seeing if maybe there's a peer play or something like that. The only thing that I can really find is there was a Wedbush downgrade on a similar company, Foundation Medicine. It's ticker FMI this morning. Not sure if traders are viewing this as like the opposite play to Foundation Medicine. I'm totally speculating there, but that's really all I could find on Biocept.
Okay, how about SFX Entertainment Inc.?
Ooh, that's SFXE.
Yes, that is trading up.
I like this company.
You do? Why?
They are in the music industry. They do a lot of live music. They do a lot of festivals, music festivals, art festivals. So that's right up my alley, pretty much.
Good volume here. 459 high in pre-market trading. We've backed off, finding just trading off those highs at 444. Once again, pretty good volume for this issue. We have traded, well, it trades 4 million a day, 8 million a day here, so we'll keep an eye on that. The move is on a decent volume. Haven't been back over $4 in a long time here. You need to go back all the way until January of this year. You had a high of 445, so getting right back up to the yearly high in a heartbeat. Also a couple tops at 461 and 462.
And there is most definitely news in this one, and a juicy headline at that. So wanted to caveat that this is a relatively new issue. IPO'd late 2013, and today, early this morning, we do have the CEO, Robert Sillerman, offering a go private deal. That's going to be at $4.75 per share for SFX Entertainment. We're trading around 445 or so right now, so there still is a little bit to go to that go private offer.
Yeah, wow, that's interesting. You go public at 13, you make a 13.39 high, you take it down to $3, and then you try and go private at 475.
Seems like a good strategy.
Yeah, for him. Okay.
Hey, I got one for you, Joe. I wanted to ask you about if you could take a look at it.
Sure.
I want to see how Crocs looks, CROX.
Okay. All right. Can we do? We're going to do that after our break.
Yeah, we have to take a quick break right now.
Bree.
Yep. Okay. We're going to bring on Ashraf Lighty, and he's from HFT Forex Strategies. He works with Fari real closely. We'll be right back with Ashraf.